Hey everyone, it's Rodney Leandro coming live to you straight from my bedroom. And today I'm bringing you some more value, some more information that can put, money in your pockets. So do like, share, and subscribe. That's all I ask you to do. And if you have any questions, just hit me up on my Instagram, mastermindr. So thank you very much for your time, and let's get straight into it. The basics of trend trading. So trend trading is a strategy that someone can use, and they don't have to be too advanced in trading. They can be new, and they can still use the strategy and see results and become profitable and consistent. Now, there is an important thing you need to bear in mind before you actually pick any strategy or do any trading, and it's these trading commandments. These trading commandments were made by a gentleman called Mark Douglas, and he has a book called Trading in the Zone. He's worked with many 7 to 8 figure earners. So that's people that have made 7 to 8 figures from Forex trading. He's mentored them, he's worked with them, he studied them, and he came up with some commandments that one could use to be as consistent and as profitable as the people that he's worked with. So I'll quickly read them. Anything can happen. You don't need to know what happens next to make money. There is a random distribution between wins and losses for any variables that define an edge. An edge is nothing more than an indication of a high probability of one thing happening. Every moment in the market is unique. I'm a consistent winner because I objectively identify my edges. I predefine a risk, or I'm willing to let go of that trade. Risk reward being 1 to 3 minimum. I'll explain what that means later on during this presentation. I completely accept the risk. I'm willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continuously monitor my susceptibility for making errors. So reviewing your previous trades and, seeing why a trade that you done was good, which should be consistent to your strategy, and maybe why one was bad. Was it your stop loss? Was it your take profit? Was it your entry? I understand the absolute necessities of these principles of consistent success, and therefore I never violate them. And having a trade sample size of 20. So taking 20 trades with whatever strategy you're using before you make a decision of, whether it is good for you or whether it's not. And if you are winning, 50% to 60% of your trades with any given strategy, that's a very good strategy, especially if you're using risk to reward of 1 to 3. So lot sizes. Lot sizes determine how much money you will make or lose from a trade. And I'll explain it in a little bit more detail and give you some examples. So what you really want to do, so you're not gambling or risking, is you want to only risk 1 to 2% of your account. If you do that, there is no way that you can blow your account. There's no way that 1 or 2 trades could make you lose all the money that's in your trading account. There just isn't. No. So what you want to do is make sure that you obey and abide by these rules, unless you want to learn. So for every £100, use a lot size of 0.01. That means that you're risking 10p per pip. If your account is now at £1,000, then you can start using 0.1, £1 per pip. If your account is at £10,000, then you can start using standard lots, 1.00. Now, if you was to catch a 40 pip move on a 0.01, that means you've made £4. If you catch that move on a 0.1, you've just made £40. If you catch that move with a standard 1.00, it means you've made £400. So the same amount of pips, but because your lot size was different, it meant that you made different profit on the same trade as someone else. Your risk to reward should be 1 to 3. This allows the odds to be put in your favors. And if the odds are in your favor, then it's going to be very hard for you not to be profitable and to break even if you have more losses. How does that sound, people? So the best example I can give you to drill this home is a coin toss. Trading is 50-50. It's buy or sell. If you press buy and price goes up, you've made money. If you press sell and price goes down, you've made money. So let's take a coin toss, heads and tails. Imagine if you was going to do a coin toss 10 times and you was going to lose £10 if the coin landed on heads. You would win 30 if the coin landed on tails. You can land on tails only 3 times out of 10 and you will still be profitable. Because why? The odds are in your favor. Let's do the maths. 3 wins, winning £30. 3 times 3, 9, 90. £90 you would have made. 7 times 10, 70. £70 loss, but you've had a £70 loss on 7 coin tosses, and you had 3 wins, but there were £30 wins on the coin tosses. So can you see why having a risk reward of 1 to 3 and putting odds in your favor allows you to have more losses, but still break even and still be in profit? So it's very important that you follow this. Now, how I learned this strategy was with a company that I'm part of. So if you're already part of the company, then I would really recommend you watching Leon Davis. Go to favorite videos and watch the strategy breakdown. It's only 24 minutes long. He's going to explain everything I'm going to explain today. And he also has live sessions that you can interact with him, and how to draw trend lines correctly. It's the best way to learn from somebody who is seeing good results. He's made 6 to 7 figures through trading. He's a good mentor and he's seeing good results. So it gives him the ability to, teach and mentor people. This is like learning football from Ronaldo or singing from Beyonce. He's a pro. You're learning from the pros. You're going to become a pro yourself. Trend trading. Here are some of the things that you need to bear in mind when it comes to trend trading. So these are some of the tick checklists that you need to tick off before you can actually go and use the strategy and place those trades. Trend trading. The trend line. Trend lines are the most important thing within trend trading. And on the third touch is when you want to pull the trigger for a buy or for a sell. Uptrend, you're looking for buys, buying low. Downtrend, you're looking for sells, selling high. And you'll see exactly how that looks within the next slides. Support and resistance, floor and ceiling. This describes key areas of the market that price has respected. So if price is respecting an area as support as the floor, it means that price got to the area and didn't go beneath it. Just like we can't go beneath the floor. So we got to that area, it bounced off it and went up. It didn't go below, it respected. So that's support, that's the floor. Then resistance means the price didn't go above the area. Price didn't go above that area. And that is known as the ceiling or resistance. We can't go above the ceiling, we can't go beneath the floor. So price respected those areas in that type of way. Then we have, so tick, trend line, tick, support or resistance, then tick, rejection candle. What that means is if it's an uptrend and you're looking for buys, on the third touch, there needs to be support, and the candle, the rejection candle, the next candle needs to be a buy and finish on, let's say, the 1 hour time frame or the 4 hour time frame. Once it's finished as a buy, then you get in for a buy. If it's a downtrend, third touch, resistance, sell. You need to see a rejection candle of a sell and finish, then you get in for that sell. So that's very important. You can do your analysis on the 1 hour time frame or on the 4 hour time frame or daily if you don't see any trends on the 1 hour time frame. TradingView is the tool that you can use as an app or as a website to do your analysis. And it's a very, very useful tool to actually do your analysis. Then we have MetaTrader 4. And MetaTrader 4 is the app that you use to actually place trades and make money trading. You need to be with a broker. They will allow you to deposit money into that brokerage account, and it will be linked to MetaTrader 4, and then you can start doing your trades. What brokers do is give you leverage. They make your money into more money that allows you to go into the trading market. Then we have a little extra kind of confirmation you can get, or let's call this some extra sauce that you can use if a trend's broken. So let's say a trend's broken on the second or third touch, then you look for support or resistance once the trend is broken on that trend line, and then with the new trend you can start following that new trend and getting for a buy or for a sell. But I'm going to show you exactly how it looks like, so don't worry, the next slides I'm going to show you exactly how all of this looks like. Then we have a trading journal. Trading journal is a very effective and good thing to have, so you can track your progress. You can look at your wins and losses and see why they are wins and losses, see if you've got the strategy down to a T, and most important, document how you feel when you're taking your trades. Because believe it or not, trading isn't like, you know, having a job or being in education. The way you grow and become consistent in trading and have success is by being neutral at all times. Not too excited when you win or too confident, not too sad or angry or revengeful when you lose. You know, you stay neutral and you do the strategy as it's meant to be done, and don't really change anything unless you become really advanced and in tune and in the zone with the market. And you would probably know when that is, but until then, don't get too happy, don't get too sad, just follow the strategy as you're meant to, and just have a sample size of 20 trades for each strategy if you're trying to find one, and make sure you document your trades and document how you feel. I swear you will thank me. You will thank me, I'm telling you. And my FX book is something that you can use to also document and see the growth within your trades. It's going to show you how much you've grown your account by, whether it's positive or negative. It's going to show you what trade you was in. It's going to show you all the analytical stuff so you can really see what's been going on with your trading account. Twin trading is a way that you can manage greed and your trading psychology. So let's say you had an £1,000 account and you're risking 1 to 2%. So that means you can place trades of 0.1 or 0.2. If you half that trade into 2 trades, this is something that you can do. So the 0.1 halved is 2 0.5 trades, 0.05. Then the 0.2 halved is going to be 2 0.1 trades. So if it's 0.05 twice, what this gives you the ability to do is get into the same trade twice, have a take profit for one, that's 1 to 3 risk to reward or above. Once the second trade is 40 or 50 pips in profit, then you can move your stop loss. So the stop loss is what stops you from taking such a big loss. The take profit is what allows you to come out of a successful trading profit. So you can move your stop loss above your entry, or, you know, at the next crucial area of support and resistance. That means that if the trade goes the wrong way, then you're coming out in profit. So that means it's risk-free. No matter what happens, you're not losing. You may not make as much money as you would have, but you're not taking no loss because your stop loss is above your entry. So it's called stop profit, making it risk-free. So it allows you to catch the move, the bigger entire move after your first take profit. And, you know, if you ever feel like you're not getting enough from the market, this is the best way to be a little bit greedy, but manage it and get more from the market. So now we're going to look at some examples of some trend trades. Any questions? Just hit me up on my Instagram, Mastermind R. Now, as we can see here, this is US oil, by the way, on the hour chart. There's a trend line. So this is a downtrend, as we can see. There's highs, sell, high, sell, high, sell. So there's highs. You'd be looking for sells. So what makes a trend a trend? 3 touches of the trend line. And this is also known as a slanted level of resistance, because price didn't go above this area, it rejected. It got to the area, rejected. It got to the area, rejected. Ceiling, resistance. So 1 touch, 2 touch, 3 touch. On the 3rd touch, what do we look for on the left? Is resistance, is more ceiling. So there was some resistance here. There was some resistance there. There was some resistance here. It doesn't matter if it goes above the area a little bit. There was still, you know, it was still a strong area of resistance. And especially on the 3rd touch, there was resistance. We wait for the rejection candle of the sell to finish. Then we get in for a sell. This is exactly what one done. This is a trade from this week. The risk to reward was 1 to 3 or above, meaning that now I can have more losses, less wins, and still be profitable. Isn't that amazing, guys? So that is how, you know, simple trend trading is. Let's move on to the next trade. This is CADCHF. This is a good one because there was a downtrend and then it also broke what was about to be an uptrend on after the 2nd touch. So there was 2 touches here, but there wasn't a 3rd touch. But what happened here is so we knew that there was a downtrend and there was also kind of an uptrend forming. But what did it do to the uptrend? So there was the 1st touch, there was a 2nd touch. There was a lot of support there, so that was a key area of support. So one was looking for a buy, but price went past the trend line. If price goes past the trend line, so it breaks the floor, but it retests off of the floor and now respects it as a ceiling, respects it as resistance, and then rejects from that area, and then rejects from that area. So look, it goes down, goes up, doesn't continue going up, then starts going down, you can get in for a sell. This means that there is no uptrend, the trend's broken, and it doesn't need to touch off of the trend line here. So it broke, it retested. You wait for the sell rejection candle to finish, then you get in for a sell. And what did I do? I had two trades. I twin traded this one. So I'm actually still in this trade now, and I'm trading the stop loss, meaning that each area of resistance, I move my stop loss lower. So that means that I'm even more risk-free and there's even more profit if the trade goes the wrong way and hits my stop loss. It's stop profit, it's risk-free. So the first trade hit TP1, that was 1 to 3 risk reward or above. So that was a good trade. Let's say it was about 80 pips. So if you're making 80 pips profit on a trade, if it's 0.01, £8, 0.1, £80, a standard 1.00, £800. So it's all the same trade, all the same pips, but your lot size determines how much you make or lose from those pips. Hope that makes sense. So yeah, the second trade is still running in profit now. So twin trading helps you manage your greed, your psychology, and get more out of the move if you did want more out of the move. And you know, as human beings, you always want more. GBP USD, this is a very good example of how you can get 1 to 2 to 3 trades out of one pair and one scenario. So pay attention, guys. 1, 2, 3. 3 touches on the trend line, also known as the slanted level of the floor and support. What did we have here? We had a key area of support, and there was a bit of resistance as well. So it was a key area of support and resistance. 1, 2, third touch, key area of support, rejection, a buy rejection candle. It finishes, you get in for a buy. That was about a 60 pip to 80 pip move. So that's a lot of profit, and that's good in terms of risk to reward, because you may have only needed to risk about 15 to 25 pips as your stop loss. So you would have put your stop loss just beneath this area of support and resistance and the trend line. Then look what happened here. Look what happened here, guys, after you would have secured some profit. 1, 2, 3. Third touch on the downtrend trend line. Resistance. Yes, it went a bit above this resistance area, but it doesn't have to be perfect. When it came to the third touch, it touched the trend line, it touched resistance again, bam. Nice sell. You wait for the rejection candle, finishes, bam. Nice sell. That's probably another 60 to 70 pips. All on the same analysis, all on the same trade. Then it gets even more interesting. It now breaks the downtrend. It breaks the downtrend. It says, look, we're changing the trend now. And what did it do? It got to that area of resistance, broke through that area of resistance. So it went through the ceiling and retested as the floor. Where the ceiling was, it now retested it as the floor. And it was small, but it counts. It counts, guys. So just because it done that, it meant that the trend had changed and one could now get into another buy. Wait for the rejection buy candle. Once that's there, you put in your buy. Stop loss, belief, the zone, and the low. And now you're in for a buy. Risk to reward 1 to 3 or above. And this was an 80 pip move. So you're securing profits. You're securing a lot of profits. Next one, we have EURCAD. Now this didn't exactly touch off of the trend line. You can do this sometimes if you want to, once you start becoming more experienced with trend trading. If you're new, I would say just have these confirmations. So the third touch, support, third touch, resistance, rejection, and then get in. But what did I see here? I saw 1, 2, the third touch. I saw that there was, an area of resistance previously to the left, and price had broken that area and retested as the floor. So I saw it go up and I saw that small retest. So I said, okay, let's get in for a buy. Got in for a buy, risk to reward 1 to 3, and we in profit. And we took out our profit and we're done. So the next one was also another one where if you're a bit more advanced, you can get into it. If not, I would say don't overcomplicate it. What I would say as well, it's good to have a support system or a mentor. That's why I'm very thankful and blessed that I'm part of a company where we have so many mentors and a good support system, because your mentor is somebody who's done the things you want to do. So they can always help you when it comes to decisions, like this. And your support team can also help you as well, because they would all be traders trading as well. So what did one see? You could have got in twice if you wanted to. So 1, 2, 3. Third touch. Third touch on the trend line. There was support. There was floor, support. It was an area of support. This was a previous area of support. I just marked that out. The rejection candle was there. We got in, you can get in for a buy there. Now, let's say for some reason you missed that entry, but you saw that there was a key area of support and resistance, break and retest. You can also get in for a buy. As long as you're not risking too much and the risk reward is 1 to 3, then what you can do is get in for a buy there. There's some other advanced things that you can start doing in terms of, looking at measured moves, using Fibonacci, but we'll save that for when you're a bit more advanced and, you can ask your mentors or support system about these things. But it's definitely very good to have a mentor. If you just want to learn on YouTube, unfortunately, you're going to have a very hard time, becoming consistent. It can still be done. Don't get me wrong, it can still be done, but you will have a bit of a challenge. Then we have EURAUD. What did EURAUD do? There was a strong uptrend. There was a strong uptrend. So you could have got in for a buy. So 1, 2, 3, support, resistance. You could have got in for a buy, let's say here. You would have still been in. The stop loss would have been here. And that would have been a successful trade. You would have made some profit. You could have even got in here as well, because that was still a key area of resistance and support. But what happened after this? Because I think I missed this. I saw the trend was being broken. So what are we looking for here? We're looking for a retest. So we're looking for price to break the floor, retest as the ceiling. What did price do? Broke the floor, retest as the ceiling on the trend line, and on the area of support and resistance. Rejection candle, 1 hour, closed, pull the trigger, boom, got into a sell. And that was 1 to 3 or above. That was about 90 pips, 85 to 90 pips. This was all this week, by the way, guys. This was all this week. So that is the basics of trend trading. And I want to say thank you very much for your time, because time's the most valuable and important commodity. You can make money and you can lose money and make it back, but that second it just went, you'll never get that back. So thank you very much for your time. Any questions, any queries, hit me up on my Instagram, MastermindR. And don't forget to like, share, and subscribe. Share the free value. There's abundance, there's wealth, there's positivity, there's good energy. Just share it out and it will come straight back to you. Thank you very much, guys.